everyone, we are here to present material about tangible assets and intangible assets. Before discussing the material, I will introduce the members of my group. I am Trianda Pratiwi, number 2010200049, and my friend Ahmad Hifni Azhar, number 2010200068. 1. Tangible assets. Tangible assets or fixed assets are assets that are long-term in nature or relatively have permanent properties such as equipment, machinery, building, and land. Another name commonly used in English for fixed assets is plant assets or property, plant and equipment. 3 characteristics of tangible assets. Number 1, has a physical form and thus isn't fixed assets. Number 2, owned and used by the company is operating activity. Number 3, not intended for sale as part of operating activity. Classified and recorded as tangible assets include land, building, and equipment. These assets normally have a useful life of more than 1 year and are used in normal operation. However, equipment that is ready to use in the event of damage to the variable equipment or during full period is considered an tangible asset, even though it is not used frequently. Conversely, tangible assets that have been abandoned or are no longer used are not included in tangible assets. Equation cost of tangible assets solving process. In addition to the purchase price, the cost of acquiring the tangible assets includes the entire amount spent to acquire the assets until it is ready for use. For example, shipping costs and equipment installation costs are included and as part of the total assets cost. Income and capital expenditures. Costs are useful only in the current period as called revenue expenditure. Costs that increase assets increase their useful life and called capital expenditures. Tangible asset renewal. A lease in agreement for the use of an asset for a certain period. Leases of often used in business. For example, vehicles, computer, medical equipment, building, and even airplanes are often rented out.
For depreciation, over time, tangible assets other than and lost their ability to provide service. As a result, the cost of equipment, building, and land development need to be transferred to expensive accounts systematically over their useful life. Gain of periodic transfer to expenses is called depreciation. Because land has unlimited capacity, it does not depreciate. 3 methods for calculating depreciation of tangible assets. Number 1, straight line circuit. Number 2, circuit of production units. Number 3, double cleaning plans depreciation pattern. Straight line circuit. The straight line method yields the same amount of depreciation expenses for each year of the useful life of the asset. Cake of production units. The unit production method yields the same amount of depreciation expense for each unit produced, or each of unit of capacity used by the asset. The cleaning balance depreciation pattern. The multiple declining balance method results in a periodic expenses that decreases progressively over the estimated useful life of the asset. The double declining balance method is applied in three steps. Step 1. Determine the straight line percentage of the expensed useful life. Step 2. Determine the double declining balance by multiplying the straight line rate from step 1 by 2. Step 3. Compute depreciation expense by multiplying the declining balance rate double from step 2 by the asset book value. 2. Intangible asset. Intangible asset. Patents, copyright, trademarks, and goodwill are long-term assets that are useful in the company's operation and are not intended for sale. These assets are called intangible assets because they do not have a physical form. Companies can obtain exclusive right to product and sell goods with one or more unicorns. Such rights are called patents issued by the government to investors. This right is valid for a useful life of 20 years. Right and trademark. The exclusive right to publish and sell written work, artistic materials, or musical composition is the grant in the form of a copyright. Copyright is published by the government and extends for up to 50 years after the author's death. Copyright fees include the entry cost of creating the work plus any administrative or legal cost of obtaining the right. Copyright purchased from other parties must be recorded at the purchase price. Goodwill. Goodwill refers to intangible assets owned by a company that are generated by beneficial factors such as location, product quality, reputation, and managerial expertise. Goodwill allows a company to generate returns on investment that often exceed normal levels.